points to literally this housing market is full of contradictions right now. And if you're buying this spring and really just want to know what's going on, this is the video. It's going to be no fluff, kind of boots on the ground, what I'm seeing, feeling, and kind of my take on this year's housing market. So number one is inventory. Inventory has had about a 59% increase compared to this time last year. That is a lot of inventory. In fact, we have the most inventory we've had since 2012. Now, until February of this year, home sales had continued to increase. However, in February, we had our first negative decline. We have finally also had a slight decrease in pricing, or on the average median sold price, it has declined about 1.3%. So with just that information, you'd think that it would be a walk in the park for buyers and that we are finally in a buyer's market and they're going to have a lot of negotiating power. It's kind of true to an extent, but I kind of want to just share what I've been seeing and kind of my own observations when it comes to this. Because unfortunately, we are still in the early stages of price discovery. So what usually happens is Mr. Seller and Mr. Buyer list their home for what they probably could have got for it last year. It sits and it sits and it sits, and then they do a minor price reduction. We're talking like $5,000 to $10,000 off the price, and then it sits again. But instead of coming down to what the market is actually willing to pay for these houses, Mr. Seller just takes it off the market and decides to wait, and Mr. Builder, he just slaps more FHA incentives on it to try and entice buyers with lower monthly payments without lowering the actual price of the home. We have had a substantial increase in listing terminations, expirations, withdrawn listings. So this leaves us in this really weird limbo and real estate cycle where so many homes are coming to the market, but more than half of them end up coming off the market without being sold. Now, this isn't to say you can't get a deal right now. The last 2 contracts I wrote for existing homes this week did get some price reductions and brand new roofs and some concessions. And for home builders, we've been able to negotiate the price down closer to base price, as well as get a lot of closing costs covered and some extras thrown into the home. So there is definitely room for negotiation for the buyers who are buying right now, but I'm just saying don't expect like a 2008 crash situation where it's going to be $50,000 to $100,000 off the asking price. Number 2, I'm seeing a lot of headlines, a lot of YouTube videos about too much builder inventory. There is a lot of noise out there when it comes to builder inventory, and we have 2 camps that have opposite viewpoints. One side says we don't have enough housing for the amount of people moving here and needing housing, and the other side says home builders have way too much inventory that they're hiding and they need to liquidate it all. Honestly, my personal take and what I've seen in the market is that both sides are a little extreme and we're somewhere in the middle right now. The truth is we do have plenty of new construction to go around, especially in the Sunbelt states. But from what I can tell, builders have zero plans to stop. And if we've learned anything in the last several years, it is that builders are very good at pacing. If they dumped all the available lots, all the available land they've purchased, all the available homes, there would be no way for them to justify their very high prices and exclusivity. So yes, I do think that builders are also in the beginning stages of price discovery. The inventory they currently have is definitely not moving like it once was, but instead of lowering those prices, they are just adding on more and more incentives. And more on that in the next video. What I'm seeing is that more in the mid-tier to luxury builders, they are selling what they have, but they are putting a pause on any new developments, new neighborhoods, or new sections, probably until late of this year or maybe early next year. They're really just going to kind of see what happens with the market. Now, for the more affordable entry-level high production builders, I feel like their strategy right now is to double down while they still can. A lot of the high production national home builders are publicly traded companies, so they have to keep production going as best as they can. And honestly, those are the types of houses that are getting crappier and crappier. I swear every time I go in, they're taking out more and more to be able to afford these incentives and closing costs in order to keep buyers coming. It is definitely quantity over quality when it comes to these types of builders, so I urge you to be very careful on the home builder you're choosing and your long-term loan terms. Buyer demand in the last year has also shifted quite a bit in the last year. Right now, it is only steady in 2 buying groups, under 350,000 and over 750,000. It's the middle buyers, the 400 to 600 range, range that are the most stuck right now. A majority of them are in low interest rates, and the move up choices are just not ideal for them right now. So they're kind of the ones that are the most trapped right now. The under 350,000 crowd is getting slammed with high production incentives here and getting lured in by home builders offering government-backed FHA incentives and being able to offer a house at a lower payment. My personal take is that you should be very careful with these because it is a good chance in 3 to 5 years you could very well be upside down in these homes. Again, more on this in the next video. The over 750 group has built-in cash, built-in equity, and they are still moving as usual because they have a lot of options and cash to back it right now. I honestly think it's going to take until late 25, maybe early mid 26 before we see a more diverse buyer pool, and that's only if price discovery continues here in Texas. Number 4 is interest rates. Honestly, I think home buyers are more fed up with the inflated prices than they are with interest rates at this point. I mean, of course, it's going to be nice if and when they do come down. Interest rates are predicted to maybe come down to the high 5s in 2026, but we'll see. I mean, there's so many variables happening right now that I don't think anybody truly knows what's happening with interest rates. I think we're finally getting to the point that the only way we're going to truly see demand is if home prices truly come down. I don't think everyone is so much waiting on interest rates as they are just seeing if the market's going to crack and maybe get some more pricing discovery in there. Consumer confidence numbers. This is another one that's kind of at a breaking point right now, which could really change things for the housing market. You know, the economy, builder confidence, all these things play a huge role in consumer confidence, especially when it comes to the housing market. And the end of last year through the early part of this year has been a rocky start at best. U.S. household debt reached an all-time record of $18.4 trillion at the end of 2024. Credit card debt balances increased $45 billion into a record of $1.2 trillion, and auto debt rose $11 billion, totaling in $1.66 trillion, which is another record. Also, home delinquencies are up almost 4%. Credit card delinquencies are up 11%, the highest since 2011, and auto loan delinquencies are up 4.8%, which is up 15% from the previous year. So across the board, debt has increased significantly, and the delinquency rates are much higher than they were last year or previous years. And even more alarming is that the FHA-backed government loans have had a sharp rise in delinquencies this year, which is obviously signaling financial stress even in the housing market. Again, there's another video coming about this next week because this is the big incentive that home builders are pushing right now, and I definitely see a correlation, people using this loan and now delinquencies. Number 6 is mortgage applications. In March, there was a uptick in mortgage applications. It had been on a decline for a few months, but something to note, the increase in mortgage applications have actually been to refinance, which checks out because in 21 through 23, when interest rates really spiked, is when home builders were pushing the 2-1 buy down, and we are now reaching the expiration for those, so people are trying to refinance into a lower rate. Unfortunately, a lot of people were probably promised empty promises about the interest rates because they haven't dropped that much, and over 22% of those refinances were rejected, which is up 10% from the previous year. Overall, between new mortgage applications and refinancing, the decline rate or rejection rate has risen 25% since last year. Given the consumer debt and confidence, I do feel like in 2025, we're going to see an even higher rate of rejections when it comes to mortgage applications. So what does this all point to? It points to literally this housing market is full of contradictions right now. Inventory is way up, but prices haven't really come down. Builders are getting desperate, but they won't lower the base price. Rates are high, but some market segments are still buying. Incentives are everywhere right now, but they're often masking overpriced new construction homes. And a lot of buyers are stuck in the middle, just trying to figure out if they should buy or not, and if it's a good time. So here's my personal take it or leave it. If you can afford a house comfortably and you plan to stay in that house long term, then yes, you should buy a house. Will prices continue to drop? Probably. Will interest rates drop? Maybe, but we don't know when the bottom is or if the bottom has already happened. Real estate works in cycles. It's always worked in cycles, and it will continue to work in cycles. So if you're still thinking long-term or stability or a place for your family, then yes, it is a good time to buy. If you're trying to time the market perfectly for a quick win, then I don't know if it's the best time to buy. But I do urge you, especially looking at these statistics and knowing what I know about home builder incentives, is that I really urge you to keep your debt to income ratio as low as possible. Go for the home that's less than what your lender says that you can afford. Make sure you're thinking beyond the payment. Think about property taxes, home insurance, home maintenance. All of these things are really, really going to add up over time. And Houston buyers in particular need to think about these things now more than ever. The people I think that are really winning in this market right now are not the ones that are chasing builder deals or the best incentives they can possibly find. I think the people that are winning right now are making grounded, thoughtful, long-term plans, really thinking about what works for their life now and in the future. If you're in this boat and would like to work together, feel free to email me. I'm always happy to help. As always, thank you so much for watching, and I will see you next time.